Eric Muathe@muathe.com with US market coverage for the weekend of October 29th and October 30th, 2016. Let's take a look at markets here with about 45 minutes before the close of Friday's session. And we are looking at the markets that have been very volatile. Right now, again, about 45 seconds. No, 45 minutes to go. And we are looking at the Nasdaq, which is down the most, about 0.48. The Dow is pretty much unchanged. S&P 500 currently down 0.31. We see that gold is up. Let me see that. Gold is up about 0.73 off the highs. And crude oil is down about 2%. Let's take a look at those charts. Let's begin by taking a look at the Nasdaq Weekly. Now, one thing that pops up here is the breakout attempt above 2015's weekly closing high. Seems to be in question right now. And the market had broken out. Of course, as we see here, stayed above that for a couple of weeks. We had a drop here for 1 week, recaptured it immediately. So we can say net the market's been holding above that level. And that level has been critical in deciding the atmosphere here. So the market is back below this level. So we start looking at the possibility, depending on where it closes for the week, that this could be a failed breakout. Failed breakouts are notorious for taking markets lower. Also, something that I note here is if you take a look at the recent weekly closing high for the Nasdaq, so that's an improvement in terms of weekly closing highs, but the RSI did not show any improvement, and I believe that negative divergence could eventually play a part in pulling this market lower. If we take a look at the daily chart, we clearly see that the market hit the line we've been watching. So we've been watching this resistance line. It's a very simple line based on the daily RSI recent highs. Once we tag that, I believe early in the week, the market's been lower since, which makes sense. And now we can see with Friday's move, what the market is doing, in my opinion, is coming back to test this line here, the recent RSI lows line. So clearly, if this line can hold, then that gives the market a reason to bounce. So we are stuck in this, what looks like a wedge in terms of the RSI on the daily. Support here would suggest that day to day the market is finding stability and could actually bounce. Now let's take that off, because I think there's another line that is more critical in my opinion, and we have to go back to this daily RSI breakout. So this move here in the RSI brought the market off the lows of 2016, and of course market's been higher since. So we draw a line from here, and I believe this is what the market is testing. You can see that we've held this line here for the lows right there. Uniform activity below the line, back above it for the lows here, and now recently tested again in September for the lows there. We tagged this for these lows, and now we are coming back and doing the best to hold that line. So I think on the daily, that's how I would conclude here, is that yes, market's been lower this past week, but in essence coming back to test this line, and we haven't broken below that line, so there's a chance it could hold. Now you add that with the previous line, which is the lows line, and you can see this is a logical place, this area here, logical area for the market to find support on the daily chart. If we take a look at the Dow, go back to the highs here, we had an improvement in terms of weekly closing high for the Dow, but this came at the expense of the RSI, showing a slight negative divergence. Since then we've been lower, and also we can see that there's a recent weekly closing low there. So that level there is one we can watch, because if the Dow breaks below that short term, that could be a sell signal. So that recent weekly closing low of 18,085.45. So anything below this level here, and the market could be giving us short-term sell signal. Right now you can see that over the past couple of weeks, market's been coming back, testing this during the week, but holding above that, which is a sign of a market that is stabilizing. Take a look at the RSI on the weekly also, showing support exactly where it needs to show support. based on this line here. And as long as this weekly RSI support line is holding, this market has a chance of moving higher. Also, let's not forget the market's been coming back to test RSI 50 and holding for short-term lows. Holding here for short-term lows there, and now we seem to be holding on that line. So as long as the RSI on the weekly is above 50, you have to give the market the benefit for at least being stable, if not moving higher. If we take a look at the Dow Daily, we can see that, wow, this is pretty much a wedge that is taking shape here. Simple wedge. We are stuck in this range in terms of price action, and until we can either break out and hold above that and move higher, or break down and continue lower, it is tough to tell which way this wedge is going to resolve. So the price has a well-defined wedge, and so does the RSI on the daily. And this wedge is pretty much about to come to a conclusion. So it looks like here in the coming days, the market is going to decide whether it wants to break out or break down below or above the wedge. Now, this is not the only charts that are showing some type of wedge formation, even on the hourly, and I'll use the RSI here because the RSI is clear. Top side support line, or resistance line, excuse me, and bottom side support line. And we've been stuck within this range at the highs for the day, for the week, up and down. We target on the top side and pull back. We find support here short term, even at Friday's lows or Friday's highs. We were trading within this range, just bouncing within this range and confusing everybody. That's the hourly chart. Take a look at the 30-minute chart for the Dow, and here I'm using RSI setting of 26 on my hourly and 30-minute charts. So we can see bottom side support even towards the last trading hour of Friday. That held as the market looked like it was going lower. And also we can see that there's a wedge on the top side. Even the highs for Friday's session, the market hit that level and pulled back. So we are stuck within this range, and at some point we might have to get out of this range to determine the next meaningful direction. So right now, if you're scratching your head as to why the market makes no sense, well, this is why. Visually, it is stuck within this range. In fact, let's take a look at the SPX, S&P 500. We go to the daily. The daily also has a well-defined wedge. If you take the top side like that, and this bottom side support. So pretty much stuck within this range ever since we broke out here. Market's been coming back and finding support on this line here. On multiple days it held here, and on Friday it held that level. So pretty much stuck in a range. Pretty much people who are maximizing profits here are your brokers, as they are collecting commissions with every trade within this wedge. Now, just like we saw for the Dow on the daily chart for the S&P 500, it is pretty much coming back to do the same thing. We had a breakout here in February. This was critical here because it brought the market off the lows for a successful move since then to all-time highs. And so what we do here is, of course, we draw our uniformity line. Why uniformity? Because every time we bounce on this line with uniform action, it tends to be good for a recovery move. And this is my own concept. Take a look at this double bottom support here for the lows there. Uniform activity below the line, back above it for the re-entry there. Double bottom support here below the line, back above it for that re-entry. We held here over the last couple of weeks or so for those lows, and Friday we are trading right there with about 30 minutes to go before the close. So clearly this is the battlefield. Support on this line with uniform action suggests that the next meaningful direction short term is higher. Otherwise, if we fail to hold the green line, which would be the first time we've held below this line, if we stay below the green line, something we haven't done since here, would suggest that now we are looking at the break of the wedge and a move lower. Since we haven't seen either of those things happening, we're just seeing the market coming back to test the line. We have to wait for the conclusion of either support on this level here, and also we have to wait for the conclusion of this well-defined wedge that the market has been constructing over the last couple of months. At the lows of Friday's session, just want to show you visually why the market held support at the lows of Friday's session. Is because if you take the lows on the 30-minute chart for the S&P 500 at the lows of Friday, the market tagged that line and bounced higher. Let's take a look at long-term picture here for the SPX, and I believe from a long-term perspective this market still remains bearish. So as long as the monthly charts look as they do here, keep in mind we made an improvement to all-time monthly closing highs. RSI failed to do the same. In fact, the RSI did not even move above 61.8, and that negative divergence tends to be the worst type of negative divergence. So we're looking at monthly charts that continue to be bearish, suggesting that maybe over time in the coming months the market is still positioning itself to go into a major bear market drop. Keep in mind that where the market stalled at the highs of 2016 in terms of the RSI is a level that has been problematic for the market going back to the most recent bear markets. Take a look at the break of this wedge here, or this trend line break corresponds with the RSI moving below the red line. So this break here led to a major bear market drop. We had the same type of a break here in late 2007, which led to another major bear market drop. So the problem that I have with the market is that in terms of how it's positioning itself on the monthly chart, as long as this red line continues to show resistance and the market is unable to move above that red line, chances are that we are also positioning ourselves to go into a major bear market drop. Eric Mwatha with Mwatha.com. For subscribers, be on the lookout for part 2 of this weekend's market analysis video, where we'll discuss some ideas and take a look at potentially some other sectors after I'm done with my research. As always, good luck, peace, and blessings. I am out. Mwah. Yeah. Gotta test this thing. You gotta test it, test it. You gotta test it. Before you record, you gotta test it. Yeah, yeah.